The electric vehicle revolution is here. We are seeing the world change, seeing the way we all interact with cars adapt over time right before our own eyes. Obviously, you want to make some sweet tendies from all this change. But what is the best way to profit from this EV revolution? I will explain how you can replicate my strategy in this video. Hey fellow investors, how are you doing? My name is Stijn and welcome to my YouTube channel. Now let's get into it. Why no Tesla or Rivian? Before I can explain my strategy in detail, we first need to understand why you shouldn't really be thinking of investing in the current EV companies. I don't need to explain you that to succeed in the stock market, you first need to invest in good companies. But what is slightly harder to understand, even great companies can still be a really bad investment. Let's look at Amazon, arguably one of the best companies ever to grace our earth. If you had invested in this amazing company in the year 1999, you would have lost more than 90% just 2 years later. Actually, from this initial investment in 99, it would have taken all the way until 2009 before you started to break even. So what I'm trying to say is, even though a company can be amazing on all metrics, it can still be a bad investment if the price is way too high. And this is even reflected by the scientific literature. This paper by Pushan on the P ratio and the stock market performance shows that the higher the P ratios are on the horizontal axis, the lower your annualized returns are. The higher we go P ratio wise, the more likely your returns are to be negative. Although, to be fair, this paper was done on the entire S&P 500 index, so not on individual companies, keep that in mind. And now, why most EV companies aren't even an investment to consider. Tesla, the ultimate EV poster child, most recently did a trailing 12-month earnings per share or EPS of $3.10. Compared it to the current share price of $930 per share, and that puts Tesla at a price to earnings ratio in excess of 300 times. What I'm trying to say is there's so much freaking growth already baked into the share price of most EV companies that even if they perform miracle after miracle for the next decade, you as an investor are most likely not to make that much money. I mean, Tesla is already near a $1 trillion market cap. Even if Tesla were to grow to the size of Apple in the next 10 years, which, let me remind you, is the current largest company on earth, that would be a phenomenal milestone, but only a 3x return, since Apple is only a $3 trillion company. So to summarize this portion of the video, some electric vehicle companies might be amazing companies that will truly change the world for the better, but it is likely they're only a lousy investment. The company might be right, but the price sure as hell isn't. And I think there is a better way to profit from this EV revolution. Gold rush. To me, the current EV mania we're seeing is very similar to the gold rush we saw happening in the US during the 19th century. Let me remind you, everyone can see the writing on the wall. Anyone can tell that there's money to be made in electric vehicles, leading to a huge rush towards the gold, towards EV companies. These people are then bidding up the prices of these gold and EV stocks higher and higher. And when this happens, the potential return of these companies goes down. And do you know who actually were the biggest winners of the 19th century gold rush? It wasn't the people working their ass off in the mines, I tell you. It was the people enabling the gold rush. It was the people selling the shovels and pickaxes. Those people made a fortune. So it isn't the gold that is most profitable. The most profitable investment is enabling the gold rush itself. So what is the equivalent of shovels and pickaxes for the EV revolution? Pickaxes for electric vehicles. Well, the biggest difference between an internal combustion engine driven car and an electric vehicle is of course the battery. And thankfully, those people bidding up the prices of the gold and EV stocks are currently heavily overlooking this area. You see, the batteries that go into electric vehicles are largely made up of a few key materials. Of course, the most used batteries in electric vehicles are lithium-ion batteries. So a chunk of these batteries is made out of lithium. Of course, different batteries use different chemical makeups. But the cathode part is often made out of a combination of lithium, nickel, manganese and cobalt. But that still leaves the other half of the battery, the anode. And thus far we've seen one material dominate this part of the battery, graphite. And I think graphite will be the best shovel and pickaxe equivalent. I think graphite is heavily overlooked but much needed for the EV revolution. Just how we like it as an investor. And don't get me wrong, I do think that the other battery materials are fundamental for this EV revolution. And I am convinced that you as an investor can get great returns investing in lithium, manganese, nickel, etc. But I do believe that graphite is the best pickaxe and shovel equivalent you can invest in. Why graphite? Well, this chart is why. We are looking at a graphite demand versus supply prediction from Rosekill in partnership with Benchmark Minerals from 2015 all the way to 2030. We can clearly see that the current operational supply of graphite will increase over time as seen by the yellow bars. And we can see that Rosekill is already penciling in future supply expected to come online between now and 2030. Even the least likely projects to succeed are taken into account. Even with all the global supply of graphite confirmed or not, we will still see a huge deficit between supply and demand starting from 2025. And that, my fellow value investors, is the opportunity. As of right now, the graphite market is dominated by synthetic graphite out of China. Synthetic graphite is a material consisting of graphitic carbon, which was obtained by graphitizing carbon at temperatures above 2500 Kelvin, meaning a lot of energy is used in producing this material. It is not a green process at all. A lot of carbon dioxide is released by producing synthetic graphite, and that is literally the polar opposite of the purpose of electric vehicles. Thankfully, natural graphite exists, and thankfully more natural graphite producers are expected to come online the following years. Natural graphite is where graphite can be found in the Earth's crust already fully graphitized, meaning no 2500 Kelvin heat treatment. Way better for the environment. There are three types of natural graphite. Amorphous graphite, basically useless for batteries, flake graphite and vein graphite, both very useful for batteries. And those two materials, flake and vein graphite, are the two materials I'm personally betting on. But how can we invest in graphite? Well, as we saw earlier, there are a lot of graphite projects now coming online. And these graphite projects and mines are the main way to invest in graphite. But be aware, most graphite mines are as we speak unprofitable. Therefore, these companies are inherently more risky as an investment. But because of all we've just discussed, I believe some of these projects still have an insane value proposition. Personally, I would stay away from the smaller projects. And if I were to invest in a mine yet to become operational, I will need to see clearly defined plans from now until operation. I also want to invest in the absolute winners. I want to invest in the companies that have the potential to become pivotal pieces in the graphite world. And I think there are only 3 companies out there which meet those criteria. Quartomic, Nouveau Graphite and Talga Group. All have operations on a different continent, and all these companies are handling this graphite problem slightly different. And the best part, all these companies are tiny as of right now. Talga Group is the biggest of these companies right now at a market cap of $340 million. So inherently there is just way more potential upside. That is because valuation wise these companies are nothing compared to a Tesla or a Rivian. Just for transparency's sake, I do currently have a long position in both Quartomic and Nouveau Graphite. As of right now, I am not invested in Talga Group. For those interested, I have done a deep dive into both Quartomic and Nouveau Graphite, so the links will be in the description. Not just electric vehicles. By betting on graphite, you're not just betting on electric vehicles. Graphite has more use cases than that. Graphite can be used for its crystalline structure and it can be used for writing and artistic materials, although the addressable market for those two are tiny, so not focus on them. The other use cases of graphite are as a lubricant in lithium-ion batteries and for graphene production. For those of you that don't know, graphene is the wonder material of the 21st century. As we speak, we're still trying to figure out how we can make this material lucratively. We're also trying to figure out what properties it has and how we can best use the material. But as a snapshot, it has the material to be 200 times stronger than steel in some use cases. It is super thin and lightweight, has extremely high thermal and electrical conductivity, and it has so many other interesting properties. And the fun part, graphene can be made out of graphite. Actually, this seems to be the easiest way to produce graphene. Synthetic graphene is also a future possibility too, but the best way to produce graphene is still yet to be seen. So by betting on graphite, graphite, you are potentially getting exposure to graphene too. See it as an added bonus. Also, I want to add that lithium-ion batteries are not just used in electric cars. Future electric ships and future electric airplanes, how far in the future they may be, would also have to use batteries. Besides, the smartphone and laptops you're currently using also have a large quantity of graphite in them. Graphite risks. Now it's time we start talking about the risks involving graphite. I think there are two main risks with an investment like I explained in this video. First, demand for graphite doesn't increase as much as we were expecting. Second, the junior mining company you decided to invest in didn't work out. The second one is all for you to research. Look at the company's debt levels, look at the management, the whole shebang. Sadly, I cannot help you too much on that front. But the first one we can talk about. Often when people talk about the risk with lithium-ion batteries, they think of solid-state batteries. And I think we can all agree that solid-state batteries will be a part of the future. How much, when, well, that we don't know. But I would bet that we still have quite some time until solid-state batteries become mainstream. Yes, technology advances quickly, but people often overestimate just how fast technology improves. I bet we still have 10, 15, 20 years until solid-state batteries take over. And even then, the solid-state batteries of today still use graphite. Graphite can be used in electrodes, and some solid-state batteries still use graphite as their anode. And then we aren't even talking about the use cases of graphene in solid-state batteries. So no, I do not think that solid-state batteries are a risk for our graphite investment. Also, I want to add that lithium-ion batteries are used in a lot of machines and appliances, not just electric vehicles. So yeah, graphite will benefit greatly from an increase in demand from electric vehicles, but graphite is not entirely dependent on it. If you have found any other risk with a potential investment in graphite, let us all know down below in the comments. Hopefully your comments can spur awesome discussion and great thinking on both sides. That said, I think we've covered most of the graphite story. I really hope you guys enjoyed this video, and if you did, please give it a like and maybe even subscribe. Comment down below what you want to talk about next, and I'll see you guys in the next one. Peace.